Welcome to our channel. Today we'll talk about mastering cryptocurrencies, uncover the secrets of prices in cryptocurrency investments. We invite you to subscribe and hit the notification bell to receive all our notifications. What's the process for understanding the value of cryptocurrencies? The value of cryptocurrencies is a crucial factor when considering investing in these digital assets. In addition to having basic knowledge about cryptography and analysis for successful transactions, it's essential to stay updated on real-time cryptocurrency prices. It's also crucial to be able to predict cryptocurrency behavior, or at least understand how its value has fluctuated, is fluctuating, and could fluctuate, to make more informed trading decisions. Therefore, before even understanding what staking entails, it's fundamental to grasp how cryptocurrencies behave, what factors impact their value, and of course, how to analyze these movements to maximize investment opportunities in every situation. What do cryptocurrencies represent? Cryptocurrencies are digital assets that operate using cryptographic encryption techniques to ensure the authenticity and integrity of transactions, as well as to control the creation of new units. Unlike physical currencies, cryptocurrencies don't have a tangible existence, but they are considered as assets with their own value, allowing them to be exchanged and used in transactions, similar to traditional currencies. A key feature is their decentralization, meaning they're not subject to control by governments or financial institutions. Some characteristics of cryptocurrencies include their value isn't directly tied to the performance of any specific economy. Changes in interest rates and monetary reserves only have an indirect effect on their value. Their value is determined by user trust and demand. Similar to commodities, they can be considered as an investment, where the return depends on speculation about price changes. Thus, understanding the behavior of cryptocurrencies, including their real-time value, is essential due to their unique nature and characteristics. What determines the value of cryptocurrencies? The price of cryptocurrencies is highly volatile and influenced by various factors, including supply and demand. The decentralized nature of cryptocurrencies allows their value to fluctuate according to supply and demand, with no institutions regulating their value. When demand exceeds supply, the price tends to increase, and vice versa. Speculation and perception. Speculation plays a significant role in the cryptocurrency market, and investment strategies can significantly impact their price. Additionally, traders' perception of a cryptocurrency can influence its value, along with emotional factors. Government restrictions and regulations. Despite being decentralized, some governments have imposed restrictions on the use of cryptocurrencies, which can affect their price. Moreover, the limited availability of certain cryptocurrencies like Bitcoin can also influence their value. If you're enjoying the video, please like, subscribe, and hit the notification bell to activate all our notifications. What does it mean, and how does the cryptocurrency market operate? The cryptocurrency market is defined as a decentralized network for exchanging digital assets, where all transactions related to these crypto assets are conducted. In this market, cryptocurrencies are not subject to regulations or backed by a central authority, and their operation is supported by blockchain technology. It's a peer-to-peer transaction system, where cryptocurrencies are primarily bought and sold through brokers or specialized exchanges. The dynamics of the cryptocurrency market are determined by supply and demand, though it's less influenced by economic and political events that affect traditional economies. However, this doesn't mean it's completely immune to all events. Several factors can impact its operation and market movements. Supply includes the total number of cryptocurrencies available for trading and the rate at which they are issued, lost, or destroyed. Market capitalization represents the total value of all existing coins in the market. Media coverage. The image and attention cryptocurrencies receive in the media can influence their market. Integration. The degree of integration of cryptocurrencies into the existing financial and technological infrastructure also affects their market. Key events. Significant events like regulatory changes, security failures, or economic crises can have a significant impact on the cryptocurrency market. How to examine the behavior of cryptocurrencies. When considering an investment in cryptocurrencies, it's essential to thoroughly analyze the behavior of their prices to anticipate future movements. This involves considering various aspects. Capitalization refers to confidence in the most established cryptocurrencies on the market. Volatility describes the variability and speed with which the price of an asset changes, with cryptocurrencies known for their high volatility. Profitability is variable due to the volatile nature of cryptocurrencies. It's crucial to avoid being influenced by trends or fads in the world of cryptocurrencies, as it's susceptible to subjective opinions. Instead, it's recommended to make independent investment decisions based on reliable information and careful analysis. For this, technical and fundamental analysis techniques can be employed. Technical analysis. Technical analysis is a methodological approach used to determine the trends of an asset by analyzing historical market behavior. This method involves examining past price movements with the goal of predicting future behavior by identifying patterns. This technique primarily focuses on studying the price using cryptocurrency charts and tools like indicators to monitor all transactions in search of investment opportunities. Despite the inherent volatility of cryptocurrencies, they also present identifiable market cycles and repetitive trends that allow visualizing opportunities to operate. Technical analysis is especially useful for making short, medium, and long-term decisions, as it generates strategies adapted to individual expectations and facilitates risk management. To conduct effective technical analysis, it's important to consider several elements. Trend shows the general direction of the price beyond normal fluctuations. Charts. Tools that represent the evolution of the price over a specific period, such as financial charts and Japanese candlesticks, which allow analyzing the movements of minimum and maximum prices at a specific moment. Technical indicators, statistical tools that help predict future market movements. Some common indicators include the simple moving average, SMA, which calculates the trend of an asset based on its closing price over a specific period, and the relative strength index, RSI, and Bollinger Bands, which can identify investment opportunities and evaluate whether an asset is overbought or oversold. Fundamental analysis. Fundamental analysis is a method used to evaluate the real valuation of an asset. Unlike technical analysis, this approach dispenses with charts and indicators, directing all attention on internal and external information that can affect the value of a cryptocurrency. It's based on studying the fundamentals of the asset, such as its monetary policy, its community, or its relationship with the traditional economic system. The goal of fundamental analysis is to determine if an investment is genuinely valuable or if there are better opportunities in the market. Instead of using statistical data to make buying or selling decisions, it uses historical and current information about the asset to predict price movements based on financial values, public network data, and macroeconomic conditions. All this contributes to evaluating the financial risk of an operation, understanding the real value of an asset and its long-term behavior. Some essential data for fundamental analysis include number of active addresses, indicates the number of addresses participating in transactions over a specific period, providing information on the actual use of the network. Number of transactions and their average value, reveals the amount of money moving within the blockchain. Network millionaires, known as whales. They are holders of large amounts of cryptocurrencies that can influence their value and affect decentralization. Network fees. Transaction fees can indicate existing demand, hash rate or staking amount, helps assess interest in mining a cryptocurrency, the efficacy of transaction processing, and network security. Financial metrics, data reflecting the financial situation of a cryptocurrency. Market capitalization represents the total value of a network. Transaction volume indicates the community's interest in a particular cryptocurrency. Asset distribution, the different modes of distribution and circulation of assets in the market can influence the price of cryptocurrencies based on their availability. Despite the high volatility of assets, the price of cryptocurrencies can be analyzed to predict their future behavior. To achieve this, it's necessary to understand and practice both technical and fundamental analysis. We warmly welcome you, hoping to have you in our next videos. Don't forget to like, subscribe, and activate the notification bell.